Breaking news, folks. Fund managers discover the bull market. That's right. Yeah, it's a presidential political season, so we should expect a lot of flip-flops. And by the way, we're getting a lot of them. But, you know, I got to tell you, I lost count on the political front. But the one that caught my eye, the flip-flop of the week, came early in the week when 200 fund managers in charge of investing more than $500 billion changed their positions dramatically over the last 2 months. These men and women have become more bullish, as a plurality of them see the rebound in the stock market as a new bull market rather than a bear market bump. Ironically, a plurality also sees a W-shaped recovery in the economy, which means a double-dip recession. This is an admission of sorts that the stock market is more about the economy a year from now, not a proxy for Main Street today. Now, because of this epiphany, these fund managers have been dumping bonds, they're using cash more, selling U.S. stocks, even easing up a little bit on tech. I've been giving these folks a hard time for a few years, but investors, we need them to put this money into the market for the rally to keep going. Let's ask some experts what they're doing. I'm going to bring in Fitzgerald Group Principal Keith Fitzgerald, Spotlight Asset Group, a CIO, Shana Sissel, along with Point View Wealth Management, David Dietze. David, let me start with you. Quite simply, new bull market, bear market bounce.
Yeah, so I like the bull market label. I mean, basically, investors and professional and money managers are coming around to two things. Don't fight the Fed. Don't fight the tape. You've got some of the lowest interest rates ever. You've got a really still commitment by the Federal Reserve to keep interest rates down. But the number one thing that investors should be looking at is progress on the vaccine front. We heard wonderful news from J&J today where they're going to expand their trial to 60,000 people around the world in September. As long as we keep making progress towards a vaccine, I predict we'll have one this year. We'll have it distributed next year. This market's going to continue to rally.
Shana, your thoughts, bear market, bull market, where are you?
I think it's a little too early to tell, but I am leaning more towards the bull market. As was already pointed out, the market's really focused on progress towards a vaccine as well as treatment that is working for COVID cases. And as long as that progress continues, I think we're definitely going to continue to run with this market. And valuations, I think, look expensive, but when you peel the onion back, what you see is that companies' earnings are being underestimated by analysts. And even this past quarter, 89% of the companies that reported as of August 7th, 83% of them had a positive earnings surprise. 64% of those companies had a positive revenue surprise. And so if you're looking at the valuation of the market and thinking it looks expensive, you have to consider that that's based on earnings estimates, which are probably too low. So I think absolutely market can keep going.
I'm going to piggyback on that for a moment because the guidance to me has been the real star. A 700% improvement from normal guidance. It's amazing how many companies gave positive guidance. Before I ask Keith this question, though, Shana, so if you're not sure, how are you positioning yourself?
We're starting to get slightly more aggressive in buying stocks that continue to be undervalued. Those quote-unquote reopening trades, things that are more in the consumer discretionary realm, things that will benefit as the economy continues to improve and as people continue to be more active in their lives, whether that be through travel or consumption. So we're getting there where we're definitely starting to be a bit more aggressive, but we're being very particular on where we take our bets.
And there's no doubt that's where there's a lot of upside. Now, Keith, I have a note earlier today. You were in these reopening trades. You kind of bought some. I think you've stopped. Where's your focus now, Keith?
I'm sorry, Charles. That I had a momentary glitch here. I am focusing on those companies now. I'm focusing on those companies that are going to survive even if we have a second outburst, even if we don't reopen, because the reopening trade has already been played out in my book. I think capital is looking for a new home. I'm going to stick with the winners, the best, not the rest in here.
I tell you what, if we get a vaccine, I want to be long Norwegian Cruise Line before that news hits. That's all I'm saying. I don't care where the share price is. So I want to have some exposure there. Let me stick with you for a moment, though, Keith. Apple, the first $2 trillion company. Listen, we know it's exciting and it's fun to talk about. By the way, it's bigger than the GDP of almost half the countries in the world. I think the viewers, though, want to know what's the next $2 trillion stock.
Well, I tell you what, I think it's going to be split evenly between Amazon and Microsoft. That's where I've got my money. That's where I'm placing my bets. I think it's not going to take much to push either over those limits. People have simply got to get over the shock of what has happened and start figuring out where the rest of the market is going to catch up.
Shannon, I want to ask you about the Federal Reserve yesterday. Right around 2 o'clock, when the minutes came in, the market started to sell a little bit. It wasn't anything dramatic, but what do you think Wall Street's looking from? What does Wall Street want from the Fed that it hasn't gotten so far?
Well, I think you saw a slight pullback because the comments from the Fed were less dovish than they've been in the recent months. But I think Wall Street just needs to know and will be fine as long as they believe that the Fed will continue to be accommodative. And there's no reason to believe that that isn't the case, which is why you saw a slight sell-off, but an almost immediate rebound, because I don't think anyone believes that the Fed is going to stop being very accommodative of the markets, and that's positive and bullish for stocks.
Yeah, there's no doubt, David Dietze. Wall Street has these little tantrums, if you will, all the time around the Fed, no matter what the minutes say, and they're used to pushing the Federal Reserve around. I want to talk about pushing Congress around. Initial jobless claims were a disappointment, the biggest jump, in fact, week-to-week jump since March. What you think that we don't need a massive deal, maybe just a so-called skinny deal? Would that be enough to keep this rally going?
Yeah, absolutely. I mean, we've seen that not all the money from the prior deals have been used. If we can get a skinny deal now that kicks this can down the road another 6 to 8 weeks, we'll have a better sense as to where we are with the vaccine, where we are with trade issues and so forth. If necessary, we could do another skinny deal. So I would settle quickly for something smaller that can be added to, as opposed to something that's too big that then you have trouble pulling back if in fact J&J, for example, gets approval on this new vaccine very quickly.
Keith, what's the big deal, the next big catalyst, if you will, for this market?
Well, I tell you, that's very hard. There's a number of them. I mean, it could be China at this point. It could be a vaccine at this point. It could be a calming down or a breakout of civility in politics. You know, I can't put my finger on it, but I think there's going to be one. So
a breakout of civility? Or incivility? I guess we're already living in incivility. A breakout in civility. Hold Katie bar the door, because something's wrong with this world if our politicians are ever civil to each other. All right, I can't hear Keith right now. I don't know if it's on my end or his end. Okay, there you go. Hey, Shannon, I want to give you the last word here. So you're somewhat cautious, but you can see where the momentum is certainly building to the upside. A lot of folks are making a big deal of where the stock market is vis-a-vis where society is. Do you think it's such a major discrepancy that there's got to be a massive change or correction in the market, or that somehow Main Street needs to catch up quickly?
I think that this belief that the market and the economy in current time should be connected is completely wrong. Historically, the market is always 12 to 18 months ahead of where they think the economy is going to be. And this is not unusual. I just think people are paying more attention to it. Things do look pretty rough, and so they don't understand the disconnect. But the market isn't paying attention to what's happening right now. They're paying attention to where they think we're going to be 12 to 18 months from now. And it's hard to say, but I believe that we will be fully into recovery mode. We'll have a vaccine, and things will have returned to some sense of normalcy.
Right. Ding, 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 ding. We have a winner. No wonder they invited you back. Now, thank you very much, Shannon. Keith, always a pleasure. And David, we'll talk to you again real soon. You guys were fantastic.